Hey everyone, I'm Simo, an equity research analyst, and today I want to talk about something bold but fascinating. Can Ethereum really reach $60,000? And what would happen to your investment if you buy now and hold until 2030? I'll take you through the fundamentals, the math, the macro, and the realistic outcome from my perspective as an analyst. So let's dive straight in. Right now, Ethereum is trading between $4,200 and $4,600 depending on market swings. The overall market cap is hovering around $500 billion. What's important is that Ethereum has evolved far beyond being just a crypto token. It's a full ecosystem powering decentralized finance, NFTs, enterprise solutions, and now even institutional infrastructure. According to Cointelegraph, staking is meaningful. About 35.7 million ETH are currently staked, representing roughly 31% of total supply. That's a major development because it locks up a big part of the circulating tokens and limits selling pressure. The staking reward is sitting near 1.9% per year, so holders are earning passive yield on top of price appreciation potential. Now, for Ethereum to reach $60,000, the market cap would need to jump from around $500 billion to roughly $7.2 trillion. That sounds crazy at first, but let's put it in context. Gold's total market cap is around $14 trillion and Bitcoin at its peak neared $1.5 trillion. If Ethereum becomes the global settlement layer for decentralized applications, DeFi, tokenized assets, and institutional smart contracts, a multi-trillion valuation is not out of the question. So how could this actually happen? There are 5 main drivers I look at in my forecast model. First, massive adoption and capital inflows. Institutional money needs to come in heavily. We're already seeing early signs of that with the new spot Ethereum ETFs in the US and Europe pulling billions in inflows. If corporate treasuries, pension funds, and sovereign wealth funds start allocating even a small fraction of their portfolios to Ethereum, demand could rise dramatically. Second, utility and real yield. Ethereum must continue to generate economic activity that benefits token holders. This means sustained network usage, high transaction fees, more DeFi, and growing Layer 2 solutions built on Ethereum. Every transaction on the network burns a small fraction of ETH, meaning the more people use it, the scarcer it gets. Third, deflationary pressure. Since the introduction of EIP 1559, a portion of every transaction fee is burned forever. Combined with staking, this creates a natural deflationary mechanism. If demand continues rising while supply is shrinking, basic economics tells us prices move up. Fourth, valuation re-rating. Right now, Ethereum trades like a high-risk growth asset. For $60,000 to happen, it must be perceived more like digital infrastructure. The same way people value cloud computing or even a digital version of the internet itself. That re-rating means higher valuation multiples on network revenue and staking yield. And fifth, macro and regulation. We can't ignore this. Ethereum's long-term growth depends heavily on an accommodating macro environment. If interest rates stay high and liquidity remains tight, it limits speculative capital. But if rates drop, regulation becomes clearer, and crypto gains legal clarity as an investable asset class, institutional flows could surge again. Now, let's model what a $60,000 Ethereum would mean for an investor starting today. Suppose you buy 1 ETH today at $4,500. To hit $60,000 by 2030, you'd need a compound annual growth rate of roughly 64% per year. That's extremely high, but not impossible in crypto. Bitcoin had similar compounded growth rates between 2015 and 2021. Let's say you stake your ETH and earn a 2% yield per year. That adds compounding effect on top of price gains. Over 6 years, your 1 ETH would not only grow in price, but also generate extra ETH rewards, slightly increasing your total holdings. So if Ethereum truly reached $60,000, that 1 ETH bought today would be worth about $60,000. If you invested $10,000 today, that's around 2.2 ETH. by 2030, your portfolio would be worth roughly $132,000 in this bullish case. That's a 12 to 13 times return in 6 years. Now let's be rational. That's the high-end case. My base case is more conservative. If Ethereum compounds at around 40 to 50% annually, which would still be huge, it could reach between $20,000 and $30,000 by 2030. In that case, your $10,000 investment becomes somewhere between $44,000 and $66,000. Still, an incredible return compared to traditional assets. But we can't build a fair analysis without addressing risks. Regulation is the biggest one. If governments decide to heavily restrict crypto or impose tough tax and compliance frameworks, institutional capital could hesitate. Also, competition from other layer 1 networks like Solana, Avalanche, or future blockchains could limit Ethereum's dominance. Then there's the issue of scalability. Ethereum needs to continue improving throughput and reduce gas fees to stay competitive. That's where layer 2 solutions like Arbitrum, Optimism, and Base become essential. And of course, we can't forget macro risk. If the global economy slows down, if rates rise again, or if there's a liquidity crunch, speculative assets like ETH will suffer. Still, in my opinion, as an equity research analyst, the probability of Ethereum outperforming traditional markets over the next 5 to 7 years is high. The ecosystem is strong, developer activity remains dominant, and Ethereum continues to attract institutional attention. Let me talk about valuation logic for a second, because that's where analysts often differ. At the current price, Ethereum trades at around 12 to 15 times protocol revenue, depending on how you define it. If we apply a forward multiple of 30 to 40 times based on expected network growth, that implies a price in the $20,000 to $30,000 range. Reaching $60,000 requires the market to value Ethereum more like a high-margin tech infrastructure company, maybe closer to the multiple used for top software firms. Now let's talk about what's driving the adoption curve. Tokenization of real-world assets is one of the most underestimated growth stories here. Major banks are already experimenting with issuing tokenized bonds and equities on Ethereum-compatible networks. If that trend accelerates, we could see trillions of dollars in real-world assets being represented on-chain. Every one of those transactions and contracts creates demand for ETH as gas and settlement collateral. Also, Ethereum's role in decentralized AI infrastructure is beginning to form. Smart contracts integrated with AI agents can automate payments, storage, and compute resources. That could open entirely new demand streams over the next decade. So, if we put all of this together, the 60,000 target represents not just price speculation, but the full maturation of Ethereum as a global economic network. It assumes high adoption, institutional integration, deflationary tokenomics, and favorable macro support. According to Tom Lee, co-founder of Fundstrat and chairman of BitMine, has expressed a highly bullish long-term view on Ethereum, including the possibility of it reaching $60,000. While his more near-term price forecast for Ethereum by the end of 2025 is between $10,000 and $12,000, with an optimistic target up to $15,000, his long-term vision extends much higher. Tom Lee's personal view on Ethereum reaching $60,000. Tom Lee sees Ethereum entering a multi-decade supercycle driven by factors such as the integration of artificial intelligence, blockchain scalability, and the tokenization of real-world assets. He believes Ethereum's role as the most trusted chain by Wall Street and policymakers positions it well for immense adoption in decentralized finance, AI-based token economies, and institutional treasury holdings. Tom Lee's $60,000 target hinges on Ethereum's growth alongside Bitcoin's rise. He projects if Bitcoin reaches around $250,000, Ethereum could follow by reaching a 0.25 ETH-I-BTC ratio, which would put ETH at about $60,000 or more. He ties the future growth to Ethereum's fundamental upgrades, growing institutional inflows, regulatory clarity, and Ethereum acting as the backbone of future token economies for robots and AI. Lee's bullish stance is reinforced by BitMine's large Ethereum holdings over 10 billion, signaling strong institutional conviction in ETH's long-term value. In summary, Tom Lee's personal view on Ethereum reaching $60,000 is grounded in a long-term perspective over the next decade or more, supported by macro trends in AI, blockchain, and institutional adoption, with current more immediate targets being much lower, around $10,000 to $15,000 by the end of 2025. Now, let's visualize your portfolio again. Imagine you start with $1,000 invested in ETH today. If we take the conservative growth scenario of 40% annual growth, by 2030 that's around $7,000. In the bullish $60,000 scenario, that same thousand turns into roughly $13,000. Even if Ethereum only achieves half of that target, say $30,000 per ETH, the return is extraordinary, but the volatility will also be extreme. This is not a stable income play, it's a high conviction, long horizon investment. From my personal analytical perspective, I think Ethereum sits at the intersection of technology, finance, and macroeconomics. It's both a software platform and a monetary network. That dual identity is what gives it potential to reach multi-trillion valuation. My approach, if I were allocating capital, would be to use a dollar cost averaging strategy, buying small amounts consistently through volatility, staking a portion for yield, and holding through cycles. That way I'm exposed to the upside while reducing timing risk. To sum it up, Ethereum at 60,000 is not a fantasy. It's a high conviction, low probability but high reward scenario. The key ingredients are institutional demand, protocol adoption, staking and burning dynamics, favorable macro, and technological progress. If Ethereum continues to dominate smart contract activity, if more real-world assets move on-chain, and if institutional money keeps flowing, the upside potential remains massive. But it requires patience, conviction, and understanding that crypto cycles are brutal in the short term and rewarding in the long term. I'm Simo, Equity Research Analyst. That's my deep dive view on Ethereum's $60,000 potential and how much you could earn by 2030 if you invest today. Stay sharp, stay analytical, and I'll see you in the next breakdown.